Welcome to Startups Simplified.
Thank you. Thanks for having me.
How are you doing, Chief?
Good.
Good. Thank you for making time.
Yes.
We had a very quick LinkedIn chat, and
Yes.
here we are. So let's get started. You are my first venture capital guest in 2024.
Okay.
I did a series with quite a few folks last year.
Okay.
So I'm very excited to understand what has changed since. Of course, there is AI.
Sure.
We'll get into the details of it.
Yeah.
But before we do that, let's just quickly start with an introduction, right?
Sure.
Who you are.
Okay.
Just talk us through your journey
Sure.
and how have you arrived at OCBC Ventura?
Okay. So I guess my name is Darryl. So I started in OCBC back in 2019. So previously I spent times in investment banking and private equity side. So been along the private market, more on the buy side, sell side. And I guess like everyone else, 2019 decided to jump the bandwagon. All right. Well, it seems like everyone's jumping back, but I'm still here today. All right. I guess that's the journey. So I'm currently heading a team of 10. So we mostly focus on Indonesia. We don't look at anywhere else. All the teams are Indonesians. We're sector agnostic. So far, we have deployed around 15 investments so far. So focus on pretty much early stage, seed to Series A.
Mm-hmm.
We don't manage third-party money. So all the capital comes in from OCBC Indonesia. So I guess like a corporate venture capital like everyone else.
Sure. Let's start with a very basic differentiator in
Correct.
terms of operating models between a PE and a venture capital.
Sure. Okay. So I guess there's two type of PE, right? One will go in for minority stake, one goes in for majority stake. But even the guys that goes in for minority, they will tend to want to have significant minority, right?
Yep.
Anywhere north of 25 to 30%, right?
Sure.
Very different from a VC, which typically do sub 20, I would say.
Mm-hmm.
Like we're comfortable with 10%, 15%, and then get diluted over time.
Sure. And how the metrics are different, because private equity generally comes in the later stage, right? Of the later stage of the company. I mean, companies are generally matured when the private equity comes in, whereas venture capital generally are on spread across, right?
Okay. So I guess funny story, right? So back in 2019, I guess I was the new kid on the block on the VC side. So we always joke around at the time, okay, maybe the PE guys are the dinosaurs and we don't know what we're doing, right? I guess fast forward today, it seems that it's always been the same way of doing things, right? It should not have changed. That it's about, I guess, flipping our positions, right? So it's buying at the right price, selling at the right price, right?
Mm-hmm.
So I don't think there's much changes.
Okay.
Probably the stage of the company differs, right? Because the PE guys manage bigger pool of money, right?
Yeah.
So they usually manage like 100 million plus, someone in the billions, right?
Mm-hmm.
So they have to deploy more capital compared to us, the VC guys.
Okay.
So that's why they look for more mature companies, right? But in terms of return, I cannot believe that in the end of the day, we're just an investment manager looking for assets.
Sure. What do you miss the most about your private equity life?
So I guess you speak more to the founders that are probably older than you, right?
Mm-hmm.
That are looking to figure out what to do for the next generations, how to pass along wealth, right? While I think these days, more on the PCs, it's more like younger founders or I guess second generation.
Also, to be honest.
Yes, surprisingly younger PCs, correct.
Yeah.
So I guess it's more dynamic in some way, right? I guess we talk about different things.
Yeah.
But I guess there's always the pro and cons on each field, right? But I guess the thing that I don't miss probably will be the long as most.
Sure. I mean, fair enough.
Yes.
Fair enough. Okay, let's talk about the last 5 years that you have spent with OCBC Ventura, right? The idea is to get an idea of how the whole ecosystem has evolved.
Sure.
In the last 5 years. I will leave it to you. If you want to take names, if you don't want to take names.
Sure.
But give us some examples, so, right? Be it in terms of sector and one of your investments. Just talk about how the whole ecosystem has evolved in the last 5 years.
Sure. So I guess I'll go from the start, right? Yeah. So when I first started, the idea was quite simple, right? Is how to beat the bank above us, right? At the time we're number 9. How to beat, I guess everyone's trying to beat BCA, right?
Yeah.
But then if we have to grow our branches and if we have to go the normal ways, it's never going to happen, right?
Sure.
Then we look at the market. If we have to partner up with the marketplace, I guess the ticketing, they're too big for us, right? It doesn't make sense for them to partner with us, right?
Sure.
They rather partner with the bigger banks. So the idea is, okay, what if we build our own digital ecosystem, right?
Mm-hmm.
It's more powering their backend because in the end, all business revolves around money, right?
Correct.
They have to save, they have to lend, they have to do payments, right? Which in the end, banks power that.
Yeah.
Right. So we realized, okay, why not we just leverage our license and then power them from behind?
Okay.
Right. So initial thought at the time, we invested into a company called Circlo, which is an e-commerce enabler.
Yeah.
So the way we thought, we are helping majority of our clients to go online, right? At the time, the threat of everyone trying to go offline to online,
yeah,
right? And that transition was helped. So we just realized, why not we find a vendor in a way for our own clients, so they're able to make, I guess, the transitions easier and faster.
Sure.
Then we invested in the company called Awan Tunai, which is just FMCG financing.
Yep.
Right. We know that we don't have what it takes. We don't have enough branches to go serve this kind of customers. But then we are able to channel money to Awan Tunai, and Awan Tunai able to channel money to the target market that we want.
Sure.
So we just see that's a win-win benefit for us. So I guess in some way it's harder for us to make an investment, right? Because then we kind of have to think what we can do with them.
But you're limited by your own ecosystem.
Correct. But then on the other side, when it does happen, it's beneficial for us in the portfolio, right? We're able to extract additional value, I would say.
Sure.
Right. Because then we can kick some volume either way, right? From their side to our side or from our side to their side.
Sure.
So I guess probably compared to everyone else, we've been doing slightly better, right? So I guess
slightly better in terms of quality of your portfolio, or
in a way, right? I think a lot of people question, so in some way, okay, maybe not so much in 2024. In 2023, I always tell people, actually, I'm happy today that things are like in 2023.
Sure.
Because if things are so rosy, we do look bad.
Yeah.
Right? Because then when you're a bit risk averse, when things are so rosy, you do look bad. But on times like this, we slightly look better than everyone else because we were risk averse.
So what did you guys do in 21, 22 when there was this golden the madness?
Okay. So the hardest part for us, and even probably for myself, right, was the FOMO, right? The FOMO was real, right? At one point, we really think, okay, maybe we're the stupid one out there that we just don't know what these guys are thinking, and what these guys are, maybe they have something
inside these guys have that they don't know.
Correct. So that was the hardest, right? It was more your bosses calling you out, hey, why do we miss this, right? Why we're not in this? Why that become your unicorn and all those, right? So I guess that was the hardest.
And what used to be your answer?
So we used to say, maybe we're still not good enough, right? At one point, seriously, I think the imposter syndrome do kick in, right?
Yeah.
Okay, maybe we're not as good as what we think we are, right? But then I guess it is what it is. I guess it's slightly easier being under a corporate flag, right? Because then I think the bosses are not so much into it on a day-to-day basis compared to probably other GPs. That kind of help us a bit. So unless it has made major news on a major newspaper, right? Generally, they will not know so much about the market.
Sure.
So I guess that kind of goes in our favor, right?
Just to clarify it for the audience. So we were talking just prior to camera getting started. So in case of OCBC Ventura, the money is from OCBC.
Correct.
The bank, right? Whereas in case of most of the other venture capital, the money comes from their lending partners.
Correct.
Who are basically pushing in money into the fund for them to invest.
Yes.
So the philosophies might be very different. Just FYI for everyone.
Correct.
Okay. So, coming back to your I mean, it is a very interesting point which you mentioned, right? Like, wherein the corporate discipline kicks in, into a fund, and it basically helps at times wherein you let go of a lot of opportunity because you don't feel that the valuation's correct, or maybe the industry, I don't know. I mean, but it basically just doesn't fit in your investment thesis. What's your investment thesis?
So at the time, it was quite simple actually. It was what we're intending to do is always, how do we make our life of customers easier, or how do we enrich our current customers? So the way is simple, right? If their business grows, they bank more with us, and then they have more savings. And if they will save more, then I can lend more money to everyone else, and the banks become more profitable, right?
Sure. So everything connects back to the bank.
Yeah, connects back to the bank.
So that's basically a plus one on top of the returns which you're gonna get from the
Correct. Yeah.
Good.
Which in some way it does makes the job harder.
Correct.
But then it makes the return of our assets probably easier.
Sure.
Because then we have think through of like, okay, I'm not saying we're always 100% right? Some thesis, of course, doesn't work.
Sure.
But then in general, we know what we want to do when we enter a portfolio.
Sure. Okay, let's get into the investing part of things, right? So, at what stage does OCBC Ventura come in generally?
Sure. So, beginning at 2020, we do look at seed stage, right? So, I guess that's the enemy for first-time manager, right? So, even for ourselves, that was always the biggest dilemma.
So, no pre-seed, only seed.
Yes. At the time, our initial thesis was to get seed.
Okay.
But then it's a typical first-time managers, right? You want to lead a deal, you want to make the news, you want to make a name for yourself, right? But then we realized that the banks are not so comfortable with seed, right? And then for any new ventures or for any new initiative in a corporate, you need a quick win.
Yeah.
So we pivoted away and then we look for a quick win.
Okay.
So we go slightly for company which is Series A. At the time, Circle was Series A. And then we realize it's a bigger company that we do get synergies right away. And then they do fundraising often. So which we figure out we might get a quick win, right? At least get a bump in the valuation. And then I think a quarter in after getting our license, COVID hits.
Okay.
Yeah. So I guess that was the first real test, I guess.
Yeah.
Brand new team, COVID hits. But then on the other side, once we enter Circle, since they're enable offline to online, they do get a significant bump.
Of
right?
course.
They got benefited a lot.
Sure.
And suddenly we have a lot of banking customers that, hey, look, I need to go on board in this marketplace, right? I need it fast. I need it if possible tomorrow, right? Then we realize, okay, we got lucky here, right?
Yeah. Sure.
Then same thing on the FMCG financing. At the time, traditional banks all pull out. They're not going to borrow lending. And then look, this Fintech guys was the solution for a lot of the shops.
Sure.
So in some way, I will not lie, we got lucky, right? We didn't know COVID was going to hit.
Yeah, of course. No one did.
Yes.
Yeah.
But I guess we benefited in that sense.
Okay. So as of today in 2024, what stage is OCBC Ventura most comfortable with in terms of coming in as an investor?
So we're more comfortable probably in the Series A and the Series B.
Series A and the Series B now. Okay.
Yes, because we realized that we are more comfortable trading the valuation upside, and in return, we take less risk. Right. I guess since our backing is an FI, generally FI is more risk averse.
Correct.
Yes. So for us, getting a 10x with 20% probability, and we'll rather take a 2x with a 75% probability. Right?
Sure.
So we do switch that and somehow turning into a PE model.
Okay. That's interesting. Yeah. When did this switch happen? I mean, when did you decide that, okay, let's only do Series A, B?
So I guess like probably like every startup, right? Every now and then we do pivot, right? We look at the market, then we realize, look, at the pre-seed and seed, things do become expensive, right? And they do take significant risks. At the time we see that, and Silicon Valley in the US, that most companies do die at that stage.
Correct.
But then
across the globe, to be honest, I think 95% fatality rate for pre-seed and seed.
But we were surprised it didn't happen in Indonesia. So we thought, look, something is wrong, right? There is no way that we are backing away the trend of global. That's why we realized, look, this is not sustainable. Then we just go up the ladder and we feel that it's safer over there.
Sure. But that also means that you will be making very less amount of investments.
Correct.
In terms of overall funding as well as the number.
Correct.
Like, for example, in 2023, how many investments?
In 2023, I think we did around 3 investments.
3 investments.
Yeah.
Okay. And this year, how much you're targeting?
This year we're targeting around 4. We have done 2 so far.
Sure.
Right.
Which 2?
So last one we have done Jendela, which is a property tech platform.
Yeah.
Right. Our thesis was quite simple. We're sitting with a lot of clients with a lot of empty apartments. Right.
So, and I love their website.
Yes.
I mean,
so it's a win-win. It's a win-win for both. Right.
Nice.
If our customer rent their apartment, that means more money in the bank. Right.
Sure.
It's purely that simple.
Sure. And which other one?
One we haven't disclosed.
Okay, haven't disclosed it.
Yes.
Okay.
Yes. And in 2024, we start doing debts as well.
Ah, nice. Oh, very nice. Very interesting. Interesting. Okay, so apart from the fact that you're looking at a compatibility from the banking side,
Yes.
what else do you look when you're exploring investment in a startup?
Okay. So probably, okay, I don't know whether it's the biggest difference or not, right? So we always tell founders that ideas are cheap, right? I know it's a bit weird, but we always believe that the real money is in the execution ability, right?
Sure.
Because then if I have to tell the founders what to do, right, I might as well be the founder, right?
Yeah.
Why do I pay significant premium and valuation and I'm the one telling them what to do?
Right. Yeah.
So I guess I always tell the best startup is the one that I invest, never calls me and then tell me, look, you're getting a 10x exit in the next 3 or 4 years, right?
Sure.
That's the best startup that we can ever have, right?
Sure.
I'm not saying, I don't think it'll ever happen, right? If you're not, that's the best, right?
Yeah, absolutely. That will make your life way more easier.
Yes.
But I mean, look, generally there is, so during 21, 22, when everything was very rosy, I've seen companies raise seed A, B within 1 year.
Correct.
Right. And I mean, the valuations were insane. But now the same founders are complaining about VCs interfering a lot in day-to-day operations, or VCs marking down their valuations. I want to understand from your side, how involved or not involved are you as a venture capital in operations or otherwise?
Sure. So I guess before going there, right, I guess I kind of want to brief on, I kind of always see this as a supply chain, right? So it's the startup going to a smaller VC, bigger VCs, then going to a smaller PE, bigger PEs, then public market, right? So I think at the time, all the talk was the bigger VCs at least thinking that, oh, I'm going to cut the PE guys and I'm going to go straight to the public, right?
Okay, yeah.
But then more and more we see that this is not an option, right? It's the gap's too far, right? So I guess the way that we see this is eventually we know that we have to sell to the PE guys, or at least that's our preferable route of exit.
The traditional route.
The traditional route, right? So if they're only going to buy us at X, so I have to go X minus certain percent.
Of course.
And
that's your upside.
Yes, that's my upside, right? So my upside is technically capped. So if I'm not willing, I guess, to be more picky, then I have to sacrifice my upside.
Sure.
Yeah. So in general, we tend to be more passive, I guess, to a bit answer your question.
Sure.
Right? We rather be more like a brainstorming partner. And we realize our biggest strength is on corporate finance and accounting. Right?
Sure. Of course.
So most of us is coming from a corporate finance, right? So if they ask us to build their model, help them on budgeting, which investor that I need to look at, I think we're very good at it, right? But then if you ask us, look, what's the best way of marketing? What's the best way of doing compliance? What's the best way to build an app? Look, you're asking the wrong person, right? Seriously, for any of the other GPs that think that they're very good at this, that's dreaming, right? I mean, we have zero IT background, right?
Sure.
We see a lot of companies that do similar things, But then every journey is unique, right? Why we're paying premium is because that we believe in the founders, right?
Sure.
That they have things that we don't have.
Well, that's very candid of you. I mean, to be very open and vocal about it. Because I've done a lot of podcasts with the founders, and there are a lot of things which we talk off camera, right? Where one of the concerns is that, boss, my VC is getting involved in my leadership hiring.
Yes.
They're getting involved and who my tech partner should be.
Yeah.
And I, to be honest, I never understood this because if you want to do that, you rather become a founder.
Yes, right.
Right. I mean, it doesn't make sense for you to call shots from outside.
Correct.
While you are not going to execute it. So it doesn't really make sense. But this is a good model. This makes a lot of sense. Sector agnostic, I heard you.
Yes.
But I still feel that despite most of the venture firms calling themselves sector agnostic, if you look at their portfolio, it leans or tends to be heavier towards one particular sector.
Sure.
I don't want to, I want you to give me an informed answer.
Sure.
Right. So I understand you're sector agnostic. You're willing to explore and open to other sectors, but there must be one or two preferred sectors.
Sure.
Right.
Yeah. So I guess these days our theses are quite simple, right?
Don't tell you.
No. So we're never focused on sector, right?
Okay.
But we focus on a specific target consumers, right? So we're targeting consumers of, I guess, ladies between 20 to 35, because we feel that they have the highest spending power, right? So we have this, I guess, stupid thesis that when guys get married, their disposable income goes down. When the girls get married, their disposable income goes up, right? So they keep spending and keep spending after they get married, right?
Sure.
While the guys is the other way around, because generally in the Eastern culture, I guess,
the finances take up. Yes.
Yeah. So
anyone building for women but 25, reach Darryl or reach me, I'll connect you.
Yes.
That's a very interesting insight. Okay, give me more.
Yes. So I guess it turns out to be more, that's why we are slightly focused more on the consumer side of things, right? Things like, I guess we go put debts on cafes, go put debts on, I guess, beauty clinics, things like, I guess, anything for the ladies, I guess, the beauty, the skins, the cosmetics, the clothings. I guess the possibilities are endless. And I guess these days with the social medias, I guess the spending power is just, the velocity has changed.
Sure. But do you really think the spending power has increased in Indonesia in general?
The consumption, okay, maybe the spending power has not increased so much.
But the consumption hasn't.
Yes. Right. Yes. But then I guess from the business side of things, they just look sales are sales, right?
Sure.
Whether it's done by credit or whether it's done by cash.
Absolutely.
It's sales.
Absolutely. Okay. So this is one question which I've asked quite a few venture capital folks. I'm going to put it to you as well. If you look at overall Indonesia as a story, right? So it looks pretty big, be it in terms of population, internet penetration, digital reach, social media spend, and everything.
Yeah.
But that does not necessarily translate into a large TAM.
Correct.
Right? I mean, I can always put it on my deck that my TAM is 180 million. Right?
Yeah.
But that does not necessarily translate to a really large TAM. So if I am, let's say example, I am in a consumer business.
Correct.
Let's say I am in a gender agnostic consumer business with a product which has a 250,000 rupiah sale price.
Yeah.
Right. How big is the TAM?
Okay. So we never really focus on that, to be honest, right? So a lot of the VC focus on TAM because they're focused on chasing that unicorns, right? But then if we look at the other way around, right? Look, I know the PE guys are going to buy me an X EBITDA, right? And it will take me 5 to 6 years to get to that EBITDA. Then I know how much do I need to grow, right? Then it's just a matter of counting. Look, what is my sales target to get this EBITDA margin, to get this EBITDA, right? And at that, I'm going to make a decent exit.
Interesting.
Yes. Very interesting. Because then for us, why do we have to get that unicorn, right? Well, in the end, every manager is chasing an IRR and an MYC, right? we're just judged by our results, right? And it's nice to have that 3 unicorns, right? But when you're doing a return of 10% IRR, you're not raising that second fund or the third fund.
Sure. Talk about this a bit more. You're deeply ingrained in the ecosystem.
Yeah.
Earlier from a PE side, now from the venture capital side. We are almost towards the end of the first fund cycle for a lot of venture capital.
Correct.
Not only in Indonesia, I'm talking about
Globally.
Asia, globally it's been there.
Yes.
So be it like India or Singapore, Indonesia, it's almost a close of first fund cycle, which is of 10 years.
Correct.
Right. You might have better insight. What kind of results have come out? Again, so very generic
Correct.
answer which I'm looking for.
Yes. So exit has always been tough, right? I think that hasn't changed, right? Even back in the PE days, exit has always been tough, right? So in general, there are not a lot of M&A activities in Indonesia, but I kind of see that it's because of lacking investment professionals on either side of the table, right? Because then if you don't have much of investment infrastructure, investment people, there are not going to be a lot of M&A activities, right? If you look like market in the US, look at market in China, there are like hundreds and hundreds of investment bankers, right?
Correct.
Well, if you look at market like Indonesia, that everyone say it's big, we have 50, 100 people in multiple firms.
But do you think that's the only reason? I mean, that's the only lack of investment professionals which don't push for better.
And I think structurally, banks here are not incentivized to finance transaction, right? So we have to go look back to like 1998, right? Because then our banks are quite restricted in Indonesia, right? Which in a way, I always find it's a good thing, right? I always tell people
way more risk adverse.
Correct. As Silicon Valley Bank will never happen in Indonesia. Correct. Like legally, they won't allow it.
Yeah.
So from a consumer point of view, I'm really happy that this is where I bank, right? Because I know my money is going to be safe. But on the other side, that it doesn't leave much for speculations, right? Tomorrow you cannot borrow to acquire a company on a leverage.
Yeah.
Right. You have to go find credit, private credit. You have to go find mezzanine. You have to go find the PE guys, which takes longer.
Sure.
Yeah. So then it limits what you can buy. Then people will just buy, okay, if I cannot buy that, then I'll just rather buy assets where it can be collateralized to the bank. Then I can borrow money, right?
Sure.
Then people go buy shares, people go buy factories, people go buy land.
Yeah. Do you think global LPs are slowing down in their investments in Indonesia?
Hopefully not.
That's absolutely your view.
Yeah. So I don't know. I don't have a full view, right?
Sure.
In some way, I could probably say I'm also at the denial, right? Sitting in Indonesia, being Indonesian, right?
To be honest, even I have the same hope. I have my own startup. I have the same hope.
Yeah.
But the reason I ask you this is you would have a way more better nuanced understanding.
Yes.
Compared to me or any startup founder. So just want to ask.
So I would say there's probably a slight pause, right?
There's slight pause.
Because then interest rate, I guess for doing nothing now in the US, you can get like 4.5, 4.75% for doing nothing, right?
Correct.
Why take the risk? Because the risk has not changed. Out of anything, the risk has gone up.
Sure.
Then the risk premium is not worth it. I always see it from that point of view, right? When the interest rate was 0, then there was that 4.75 extra risk premium to the startups.
Correct.
So,
but do you think that this is also because of lack of returns on the current investments? How do you see the current investment made in Indonesia?
Okay. I always see it from both sides, right?
Please.
We do realize that the pre-seed and seed is getting more and more expensive, right?
Okay.
But
define expensive for people.
That they have not generated a lot of revenues, then we have to pay a higher valuation. But then on the other side, you have to see it from the supply side, right? Yeah. From people trying to build the next startups.
Correct.
I always meet people that very good founders, very good track record, and they always tell me, look, that X guy or that Y girl or that Z guy built this and they were not doing a good job. They were able to raise this much, and this much. Why should I take a discount? You know I'm better. We all agree that we are doing a better job. Why am I getting penalized? That's the hard part, right? In the end, it's a supply and demand market.
Sure.
Yeah. The supplies aren't going to budge. They know that it's getting harder and harder to build one, right?
True.
Less and less number of founders. So
Even the accelerators have slowed down a lot. It's very ironical to see it. Accelerator programs have also slowed down a lot. I mean, compared to what we had in 21-22 with Surge and Antler pushing out so many new founders. It was pretty exciting, to be honest, because I mean, you had a plethora of variety of startups. It has slowed down significantly in the last year and a half.
Yes. So it's funny that you mentioned this, right? I just came back from a school seminar full of students, right?
Yeah.
They asked me this very innocent, simple question. Can you tell me who actually got rich becoming a founder, right? What if I want to be a founder and my goal is just to become rich?
Sure.
Then it took me a hard full minute to actually figure out what's the answer.
Yeah.
And until today, I can't tell you the answer.
I mean, it's a tricky answer. It's a tricky question as well. In my very humble opinion, I feel only the founders who took some secondaries made any sort of money.
Correct. Exactly. You can count them by hands.
Yeah, count them by hands. True.
Yes. True. And then the next question will be, why should I be a startup founder?
Yeah.
I guess that's the reality where we're sitting today, right? The next generation of founders sitting at the schools are thinking that.
I think somewhere in the last I think last 5-6 years, the whole media attention turned this exhausting job into a very sexy job of being a founder. I mean, I'll be very honest with you. Even I got lured into the sexiness of being an entrepreneur. I mean, I was doing pretty well for my life. I'm still doing, but I was doing way better. I'm like earning very good salary in Indonesia. But then you keep reading so much. You keep listening to so many success stories because generally people don't talk about failure. Right? I mean, it's very difficult to get a founder on a podcast. Startup has failed to share his experience. They generally don't tend to. So you only hear success stories. Right. So this had created a very, very interesting charisma around being an entrepreneur and all this noise about $100 million, why $50 million, $200 million being raised. It had created a very false picture in a lot of people's head. But today, I meet new founders or second time, third time founders. They are building their startups very differently. They are very clear that, hey, this startup will not be venture backed because it does not need to be venture backed. I just need some initial money. I take it from my friends, my family members, and I want to grow it into a profitable business. Right. And when I talk to them, their focus is extremely different. Their teams are very lean in terms of growth. And they're on top of their numbers. Vis-a-vis at the same time, I'm speaking to folks who raise good amount of money. It's very different, contrasting stories. The question which I'm leading to is that, let's say, for example, if today I am someone who's bootstrapped my company and I've reached a certain revenue figure, and now I need a capital to actually just put myself in the orbit in terms of growth. Would OCBC Ventura would be a right partner to pitch, or do you still go through that pre-seed, seed, A, B strategy?
So I guess it all depends, right? So I like where you guys are leading, right? So we have been campaigning for the whole year, actually, why actually majority of the company should not be VC backed, right? So I'm not saying that. So VC doesn't work for everybody, right?
Yeah.
And it shouldn't.
Every company should not be a VC company.
Correct. We have a short time of horizon, right? A lot of people think 5 to 7 years are long, but honestly, to build a company and to build a brand, it's not that long.
Short.
It's very short, right? But we have to exit. We don't have a choice, right? That's how the game is played, right? And not everything can, I guess, skyrocket in that sense, right?
True.
Some can, some got lucky, but I guess majority do not. And I guess a lot of people forget the other access to funding, right?
Yeah.
Like what you mentioned, friends and families,
Yeah.
right? I always tell people, look, if your own friends and family do not buy into what you're doing, I should not be buying what you're doing.
Oh, absolutely. 100% agree.
Exactly, right?
I 100% agree.
So I guess they forget, right? And now these days, you see a lot of founders, I guess not so much these days, probably a year or 2 years before, that, look, I cannot build this because I don't have X, I don't have Y capital, then I cannot build, right? But then if you look at it 10 or 15 years ago, before the days of the VC, people just build, people borrow, people pledge their house, right? They try to live their dream, right? They put everything on the basket and then, look, this is what I want and this is what I'm going to build.
Correct.
Right? We are missing those. And I guess if we want to thrive the next 2 3 years, we need those kind of founders to be back.
I am with you. Let's talk about some sectors. I'll just throw a few sectors, and I would love to hear what you think about them. Let's start with fintech, especially the the lending ones. Where do you think? Where are we in terms of lending to fintechs in Indonesia?
Okay. So I guess the lending has kind of gave them a bad name for themselves, I would say, right?
Yep.
A lot of scandals, but then I don't think it was a bad intent, right? I always tell like there's two types, right? One is bad intent, one is bad corporate governance, right? I kind of see that this is a problem of bad corporate governance, right? Where you want to push growth at any cost and then people start doing bad things, right? People are not doing their analysis properly. People check here left and right, right? And I think that's what happening to the market. But then I guess now the mentality is to not grow at all costs. Right? So I kind of see that they will rebound, right? But then on the other side, there's always the regulators, which is we cannot predict, right? And regulators do need to put a step on this because then a lot of consumer retail money, people that do not really know what they're entering, right, lost their money. Right. Because if you ask us, do we see this coming? Yes, we do. Right. We see some of the companies, so we're not so surprised that it happened.
The interest rates were, I mean, when I heard it for the first time, like, are you serious? I mean, the first time when I heard it, I think it was back in 2019, the interest rate used to be 28% a month.
Yes.
28% a month. I'm like, this is insane.
Yes.
It used to be, if I'm not wrong, it was 0.16% a day. I'm like, okay, that's interesting. Now, which is down to, I believe, 0.4% a day.
I can't remember, but it's capped now. They have some, but it's still some crazy.
8% a month.
Some crazy.
Something on those lines. But I mean, we've seen a lot of fintech, especially fintech P2P lending companies simply vanish. There are a handful of them left. Okay. How about MSME startups which are catered to MSMEs? Basically, we're either trying to solve for supply chain or they are trying to solve for bookkeeping. Because Indonesia has a large MSME market.
Sure.
It looks very lucrative.
Yes.
But whatever I have studied is, it is very anti-digital.
Okay.
So they don't want clean it.
Yes.
Because it just works the way it is. There are a lot of incentives aligned in not cleaning it. That's my study of it. But
So us as the bank, and actually we have one portfolio which does MSME financing, right? So we both believe that it's not everything is about digitization, right? As you mentioned, a lot of people are resistant to digital, right? But then it doesn't mean that we don't digitize our backend, don't digitize our mid-end, right?
Absolutely.
So, for example, today, right, with the help of AI and everything else, I'm able to analyze company faster, right? But in the end, it's Darryl and the team making human decision based on informed and faster processing, right? The same as MSME lending, right? Today, you have technology whereby it's easily to track people, right? And it's easy whether, look, if I put an app on your phone and if I check, you're not going to your store every day, right? Or at least not 5 days a week. I know that's a fake address.
True.
If you're not going back to your home, then that's not your real address, right? So things like that do help eliminate risk, right? I guess it's putting the risk on another basket because then on lending, we can never have zero risk. There's no zero risk lending.
Absolutely.
Right. But then we can mitigate the risk. So we're using digital, we're using technology to mitigate this risk, right? It can never go down to zero, but then if I know more about you and if I know the pattern, then I'm able to give you a cheaper lending.
Sure.
I guess that's where we're going at. And companies that are doing that are benefiting, right? Because then I guess the spirit is just that some of the startups and fintech, I guess, they're just more agile than the bank. It's not the bank cannot do it. They're just more agile, right?
True.
They have less compliance, less like
regulatory. Exactly.
So they're able to do more POCs. They're able to move left and right. They don't have to go BOD meetings, right? Things happen faster.
True.
Right. But they're not secret sauce, right? Lending business has been around 100 of years.
True. How many pitches do you get in a year? So let's do 2023. How many pitches have you?
I don't exactly remember the numbers, but probably somewhere on the 300, 400, right? Combination of all the team, right?
Sure.
So,
and how many of them have AI in it?
So we actually didn't meet any of the AI companies. So we auto-eliminate AI.
Why?
We're not there yet.
We are, as in
Indonesia companies are not ready yet.
Okay.
We are willing to use it, but we're not willing to pay for it.
What are we willing to pay for? This is a massive question. If anyone can answer, please. As an economy, what are we willing to pay for?
Things that I would say things that are
absolutely necessary.
No, things with experience, right? Are getting good consumer spending market share. Things that you can flaunt, I guess, right? Things that are out there, aspirational, right? And things that you see that you can brag to your friends, right? Financial literacy are relatively low here. Right? People don't save for rainy days, right? That's why when people got hit by layoff, people got hit by COVID, you struggle, right? Now our economy struggles because we don't have enough money to save.
Correct. So AI is auto-elimination. I think we got our thumbnail. Okay. B2B SaaS.
Yes.
Right. I mean, it's a very large market in terms of US and even to India some extent. But unfortunately, I don't see many strong B2B SaaS companies coming out of Indonesia.
Correct.
I think I know only a handful who are born and developed in Indonesia for the globe or for Indonesia and Southeast Asia. What are your thoughts on that?
So I guess actually that was our initial thesis at that time, SME solution.
Okay.
But then we realized a lot of SMEs do not want to pay, right? Labors are still cheap here.
Yes.
Right. So they say that if I still need to use the solution and use labor, that means I'm not saving. It's an extra cost. Right. So they see it from that point of view. So unless productivity gets increased, they're very scared and they're very skeptical. And the other one has always been related around data, right? Data privacy here is very low, right?
Yeah.
They're very scared that if I use this technology, if I use this startup, look, either they're going to shut down, they're going to close down, or they're going to steal my data, right? If they're not charging me a good amount of money, then they're monetizing
My data.
Yes. So a lot of people got scared, right? And it's the whole infrastructure, right? If I use an accounting software, will they tell my tax office about my revenue, about my profit?
Yeah.
It gets people jumpy, right? And over here, sales process is very bureaucratic. It takes long. It will be the cycle is just too long.
Yeah.
Right. Yeah. Unless you're selling an expensive solution, it's not worth it.
Oh no, it's still the same. I mean, yeah, I agree 100%. I just share a very small story. Okay. Yes. So when I first moved to Indonesia back in 2017, I was at enterprise sales, selling marketing technology platforms. So I meet this insurance company. It's a large insurance company, and we have 5 rounds of discussions over 2 months. And then in the last meeting, I am meeting the CTO, I'm meeting the CMO, I'm meeting the CIO, everyone in one room, and they are like, okay, let's shake hands on this. We are good to go. You know, when did they buy?
Next year.
After 18 months. After 18 months. And I'm like, okay, I am never putting this in my sales pipeline. Until I get the purchase order, it is not sold. So yeah, I agree with you completely. The sales cycles are absolutely very long. But I still feel there is a good possibility of creating for Asia in terms of SaaS or in terms of platforms from Indonesia. Because now the talent is available.
Yes.
That there is a talent which has worked on building apps like Tokopedia, Traveloka, right? I mean, so the talent is out there. I think it's matter of unit economics fitting in.
Sure.
Because I mean, if you're building SaaS, you want to sell it to in your home country first.
Correct.
Right? And only if the sales cycle becomes easier, you can actually go out and start selling outside.
Correct. But then I think talents is always a double-edged sword, right? I always see this from a supply and demand point of view, right?
Sure.
Yes, there are a lot of talents building, right? But are there a lot of talents that this SME can hire to use? I think that's where people are missing. Right?
Sure.
We only have limited talents that are working on the startup side of things, working in the bigger conglomerates, working for the bigger companies, the MNCs. But this SME cannot afford these workers.
Sure.
And the literacy, the tech literacy for these workers are low, right? So you're building something that they're not able to use, right? The easiest part, and say accounting software looks like a no-brainer, right?
Yeah.
But then I just came to this, I came to this beauty salon, big revenue, multiple outlets. Give me a very simple answer, right? My staff only know how to use Excel.
Yes.
If I have to change my solution, I have to change my staff.
Yeah.
And I cannot afford it. And it's been working. Why should I change?
Yeah.
And that's,
I mean, for
the reality
true.
of SMEs.
Well, I mean, I agree. I completely agree. I mean, so apart from enterprises, you don't really have much customers to sell them.
Correct. That's why I like a lot of the initiative of the government, pushing education, right? A lot of people like improving our universities, improving our schools, right? If we want to get, Indonesia keeps talking about our golden age of 2045. Right?
Yeah.
The only way we're going to get there is improve educations, right? If we're not, look, economy will reach there, but then the users
won't. So it's going to be a very short. I mean, if the users don't, then it's going to be a very short cycle of growth.
Yes.
Talking of education, what are your thoughts on education tech?
So I have a personal bias against education tech.
Okay.
I'm one of those person that believe that it should be a social thing, and anything, I guess we have a capitalist in nature, and it's all about profit.
Sure.
Yeah. So I'm always in this dilemma of improving education or making profits on educations. And I just choose to have a bit of a higher bar on education and health tech specifically. Because then we believe that in order for the country to improve, these two sectors needs to improve. And unless you are specific fund targeting these two, it's hard to add value, or it's hard to really help them to grow.
Very, very interesting and very important perspective. I 100% agree with you on this, on both health tech as well as education tech. Health tech, to some extent, I believe it's okay if it is capitalistic in nature, because it will only advance the R&D and more.
Right.
But especially on the EdTech part, I think it should be more social impact based. I see a lot of tutors now on YouTube.
Yes.
And they are so amazing.
Yes.
I mean, very interactive.
Yes.
Might not be interactive in the real sense of things, but the lectures are very interactive, very well explained, and they're making good money. Correct. Right? I mean, in terms of views, ad revenue, selling courses online, they are doing pretty well. So I agree with you 100% on that. Thoughts on Agritech?
It's hard.
Expand. Why?
So I guess a lot of us grows up in the cities, right? At least a lot of the venture capitalists that grow up over, either some of us do study overseas or some of us study in the cities, right?
Yeah.
And the good universities, right? So for us to really understand agri, we're just joking ourselves, right? At least I've been there, right? But I can tell you that majority of us never been on a farm, right? Not the chicken farm, not the paddy farm, right? It's hard. It's hard to understand it. We can't relate what's their pain point. And if we can't relate what's their pain point, it's a bit harder, right? For me, it's easier investing into consumer tech. Look, it's things that you see in the mall. You know that your friends or your staff can relate, right? At least we can see what's the problem. And if they're not good, we know how to help them improve. But if you ask us to fix the agris, it's very selected amount of people that really understand this. And at least from our side and our company, we're not well suited.
Sure. But we've seen a lot of investments happening in Agritech, at least in the last couple of years.
Correct.
Again, I mean, to be honest, I don't have any expertise to talk about Agritech. As you rightly said, never been to a farm, really don't know the process. So how about EV? EV and renewables?
So EV and renewables, I mean, we do have a lot of materials, right? I mean, from that point of view, I think there's a lot of significant investment. It's just that I don't think it's a PC play, right? It's a bigger PE guys. It's a bigger sovereign wealth fund investing into big smelters and processing all these minerals, right? Into batteries, right? So I don't think that's a PC play. But then if you're asking about the motorbikes and the cars, I believe that one day we will get there. It's just that
we're still not here.
It's not there yet. So actually, I just ride an EV bike yesterday. So my only complaint is that since the battery is, I guess the battery is big, right? And it's set in the middle. And then they cannot go over the bumpy roads, right? While the ideas of getting into a bike, at least in Indonesia or countries like India, right, is to go on the shortcut, right?
Correct. Yes.
So they're unable to do that, and they're not as agile.
Sure.
So I guess we will get there, right?
Sure. But not yet.
Not yet. I think we're slightly a bit early, right? They do not go as long and they do not go as fast. I know it's funny. We're a big traffic city, but then the riders always want to have a fast bike. Then they always claim that, look, this EV can only go 60 kilometers an hour, right?
And this is a very, very local observation which you're giving out. But of course, I agree. Especially in Indonesia, the riders just want to have the faster route.
Yes.
Interesting. So global AI phenomena and FOMO, it's auto-eliminated.
Yes.
Another global phenomena, EV, is eliminated. Interesting.
Yes.
Interesting. Okay. So, from a pitch perspective,
sure.
What's an ideal pitch according to you?
Okay.
I like when you hear it, you're like, okay,
sure,
this is great.
So a lot of people call it different things, right?
Yeah.
But I call it unique value proposition, right? I like companies which have a lot of competition, right?
A lot of competition.
Yes. Correct.
You are telling everything which is opposite to what I've been hearing.
Yes.
Please go on.
Because if there's a lot of competition, the market size are big. You don't have to do your research, right? When everyone is there, definitely it's a big market, right? You just have to be better than your competitor, right? But I guess in some way, business are simple, right? When you're better than competitors, people buy your product, people use your service, you get revenues, and then you make a lot of money. To me, it's that simple, right? Just tell me what you're good at and how you're going to beat the competitors. And the best part is all you need is money, right? When we have that, that's perfect for us.
That's the ideal pitch.
That's the ideal pitch, right? It's that, right? You know how to beat it. You know who's your competitor, right? You see so many people pitch like, oh, look, I'm no competition. This is different. And in the end, we know it's the same, right? We get 100 of pitches. We see people pitching the same thing every single day. It's the flavor of the month, right?
Yeah.
So we do know who's your competition, right? So when you don't mention it, you're not looking good, right? Because we know exactly, look, that guy beside you that we met an hour ago or we have a call an hour ago was just pitching the same thing, right?
Interesting. Oh, very, very interesting. I mean, you're being very, very candid. You're talking pretty much the stuff which people avoid in front of the camera. So thank you for doing that. Now let's decode a few few prominent lines which we keep reading in the Technicias and the TechCrunch and more. A venture capital saying, we like founders who are solving very difficult problems.
Okay.
What does it really mean?
I think it's true, right? So a lot of the venture capital are shooting for the moons and the LP is asking them for it, right? I guess for viewers, audience that are not familiar in the market, that I always look this as an asset allocation.
Okay.
Right. So the guy at the top of the food chain, I guess in this case, the LP or the very rich people or the big endowment fund, right? They are allocating their risky assets into venture capital, right? So they are telling this venture capital guys, take the most risk because I'm expecting you to take the most, I want me the most return, right? So they can't change how they play, right? But it's a bit different from our side as a corporate venture capital, right? Because you were asking me today whether it was easier or not being a corporate venture capital. To me, it's easier because then I can easily pivot, right? I tell, look, it's not worth it anymore to take this kind of risk. We're not getting the return that we want, right?
There's a lot of sanity also, right? I mean,
yes. Then because then they're not looking at this. Look, this is my safe asset, this is my risky asset, and this is my riskier asset. So I'm able to pivot along the different types of risks quite easily.
Sure.
Compared to my competitors, which is other VCs that they're stuck. They have to take risks.
Yeah.
Right. Yeah. Imagine being the VC guys that didn't invest in NFT during those heyday.
Yeah.
Right.
Yeah.
You're going to get that call and people are going to tell you, okay, look, if you're not going to invest in any of those and you're not making money in these, I'm going to put money in other managers, right?
Yeah.
And sadly, that's the reality, right? Just like AI, right? If your manager start putting money on AI, you as the guy with money is going to be like, okay, I'm just going to switch, right? I'm going to put the money in the next guy that makes money on AI, right?
Sure.
Yes. So I guess that's the hard part for us, right? So sometimes we do have to chase, right? Because then we're fighting for money allocations, right? I think that's where founders tends to forget that we are also raising fund.
Yeah.
It's not just them raising fund, right?
Correct. Okay. I think we are towards the last leg of the podcast. What do you think about the next couple of years in the Indonesia tech ecosystem? What are your thoughts? Where are we headed?
Okay. So I think we're headed to the right direction. I think this is the new normal, right? Companies do have to die, right? 100% success rate is not a good ecosystem, right?
True.
I think we're just hoping for the next generation that we do have a better investors, better investment professionals, and then we do have a better founders, right? Because this is interlinked. You cannot have a good founders without having a good investors and good investment professionals.
Correct.
So
it's a chicken nice thing.
It's all interlinked, right? So I guess rather than having the blaming game, it's more like us. Okay, what did we do wrong the last 2-3 years, and how do we fix it going forward, right?
But blaming game is our favorite pastime, right? Especially in India, Indonesia,
Yes.
Philippines also.
Yes.
Blaming is our favorite pastime.
Yeah.
Coffee is all blaming.
So I guess it does help. I don't know whether I guess Tech in Asia built quite nice thing.
Yeah.
It was like glass wall for the VC guys.
Correct.
I see that's a good part. Right?
Brings some sort of transparency.
Yes. I guess it's not I don't think it's a fair full picture.
Yeah.
I guess sitting on the other side, right?
And it's one-sided view.
Yes. The success rate supposed to be low, right? I think that's where people forget. The media over glorified that this was supposed to be an easy journey.
Yeah.
Fundraising was supposed to be an easy task, right?
Correct.
It's not, right? But then I could tell you when you build it, when you have that big companies doing IPO or got bought out, the journey is worth it.
Yeah.
Right.
Yeah.
So whether it's worth your time, whether it's worth your risk, I think that's where each founder needs to really think hard
And take the
call whether they want to enter this journey or not, because it's a point of no return, right?
Absolutely.
I always tell, once you take VC money, it's a water that you cannot never close, right? Yes. Once you take funding, you have to go on the fundraising route, right? That's the game.
On that note, thank you so much for doing this.
Thank you.
Really appreciate it.
Yes. Thank you.